Let's talk about today's live stream sponsor, ProfitX. ProfitX allows traders to get up to 1.2 million in simulated capital for their trading. But on this simulated trading capital, you get an 80% profit share of the simulated profits. That's real money on simulated accounts. They also offer unlimited trading days to their traders, so there's no kind of number of trades you can or can't place during the duration of your challenge. They also allow their traders to trade 800 plus assets, so you can pretty much trade anything with this one prop firm. When we look into sponsors for this show, we do also make sure that the team behind the scenes seems as professional as possible. This is a big team, not a kind of influencer or solo run ship. This is a professional team running ProfitX, so I want to encourage you, check them out, do your own due diligence, and see if this is the right firm for you. Now back to the stream.
All right, everybody. Good morning, good afternoon. Welcome back. Hope you're doing well and staying safe in these crazy markets we're living in. I've got some losing positions going on today. Stocks lower here. I'm actually not really sure why, but let's see if we can find that out today. Got crypto down here. Dollar index still strong, possibly continuing. If I'm going to default to something that's causing the market to continue to sell off, it's going to be dollar strength, yields rising. Let's see if that is the case. Yeah, I mean, you can see the yields continuing to push through that 4.7 barrier. We've got to now kind of mark this as potential support when we look at the daily chart for 10-year yield. This is problematic for risk assets. And we'll see if it wants to continue. I mean, the long-term trend here now for yields continues to be to the upside. And as long as that is the case, right, risk assets are going to struggle a little bit. Although, to be honest, I could be wrong about this, but I think that we're going to top out on yields, somewhere between this range. And if I'm wrong about that, obviously, I'll pay the price. As anytime you're wrong in trading, you pay the price. But here's the thing about yields, right? Yields being up at these levels make borrowing more costly for everybody, businesses and consumers. If you go and you're trying to raise capital for a business venture, or you are looking to buy a home or a car, anytime yields are rising, rates are rising, the idea is, look, it's going to be more expensive to borrow money. So this rising at some point usually will get the attention of the stock market and risk assets in general, real estate, technology stocks, things that need to borrow money. They eventually get scared of, rates that are just rising and rising. And so last Friday's jobs data point was really a little bit of a scare for markets, right? You saw a lot of people get spooked by really strong jobs data. Now, actually, this weekend, I spent about half of it just arguing with people in my YouTube comment section. I need to do a little bit less of that, but it was actually good argument. It was, actually kind of like good conversation arguments. And it wasn't like real fighting. It was more, we were discussing, why did the stock market go down on bad jobs data? Was anybody else confused by that? Was anybody confused, like, why the heck are stocks dropping on good jobs data? Now the NASDAQ is actually, we stopped out of this trade. NASDAQ is continuing to push lower here under support and maybe testing this new area, right? We might be going into another stab at fresh lows for the NASDAQ here. Was anybody else confused by the S&P 500's move lower? By the way, hello to everybody. Good afternoon. Hello. I see a lot of people saying hi. Hope you're doing well. Sorry, I jumped right into the action today. I'm just, there's a lot of market theory we got to discuss, because this is a little bit more advanced. If you're brand new to fundamentals, the jobs data on Friday might have really confused you. Let's try and make light of it, because it's a really important thing that we understand this. Why is it that jobs data on Friday beat expectations by a long shot, and in response, strong jobs, the stock market sold off? Well, here's why. We're trying to land a ship here, or like, let's think we're flying in an airplane. And if I draw an airplane, it's going to be a terribly drawn airplane. Actually, hey, we're starting out right. Let's see if we, like, you've got the airplane jet kind of like little thing here, and then there's this, right? The wing. I don't know. It's kind of a good jet, right? Could be worse. Anyways, here's our airplane, right? We're trying to land this thing. And and what I mean by this is our inflation situation. This is the inflation plane. Okay. Now, the inflation plane, we're trying to land it. You don't want inflation to go up. We're trying to land the plane, right? Our goal is to land, right? So if we're trying to land, actually, you know what? I'm going to give myself a better canvas for this. So if we're trying to land the plane, right? We don't want to go up, right? That's no good. We don't want inflation to go up. We want inflation to do what? The ideal is a soft landing, right? Where you do this. By the way, oh, this is a great analogy. Holy crap, Nick, you're on another level with this one. 2% is our target inflation rate. Right now, we're up, let's say, close to 3%. Okay, that's no good. We don't want 2%. I'm sorry, we don't want 3% inflation. We want 2% inflation. So to get inflation down, the Fed has to navigate this plane. The Fed is the pilot, by the way. Fed is the pilot of this plane. Okay, so we want data like jobs data, PMIs data. We want it to stay strong enough that the plane stays intact, but we don't need it to be so hot that we're just taking off again, right? That's the issue. We don't want this because then inflation goes up too. Our altitude is inflation. Oh my gosh, this is the perfect analogy. That's why they call it that's why people call it the soft landing, right? The soft landing is we get inflation to come down and we don't crash the plane, right? So if you restrict the economy too much and we cause a crash landing, the plane blows up. We don't want that, right? We don't want the plane to go up. We don't want the plane to crash. We want it to land softly. So to do that, economy has to hold up okay, but inflation also has to come down. Now, jobs data on Friday suggested which one? Scenario 1, 2, or 3? It was number 3. It suggests that the economy is ramping faster and that this could mean altitude goes up, aka inflation rises. We don't want that, right? We want inflation to cool off, but we also don't want the jobs market to crash either. So you want somewhere in between, Goldilocks, aka you want not too hot, not too cold. That is another way of saying it. You hear the two expressions that I hear most frequently are Goldilocks economic data and soft landing. Same kind of concept. We want data that's not too hot, not too cold. So people were confused on Friday because on Friday you had very strong jobs data and yet the stock market sold off. It's because the stock market is saying, oh boy, we're going higher. Inflation is a problem. And we can see that reflected in the US 10-year Treasury yield. It's floating higher once more and ultimately spooking the stock market. Does that help? Does that make more sense? If that was helpful to you, do me a favor, hit the thumbs up button on the stream and type yes in the chat. It will just greatly let me know that that analogy made sense, that it resonated. I felt pretty good about that one. That felt like a good analogy. It's a complex topic to discuss, especially for those newer to fundamentals. That is not an easy topic. So if you kind of caught on to that, if that made good sense to you, then awesome. I'm glad that we could go through that. Dre, what's up, man? Thank you very much for the $2 donation. Appreciate you. That's awesome, man. Morning, Nick. Caught EU from 1.0405 to 1.0223. So you're catching some sell trade side. Let's take a look at that really quick. So if I pull up Euro US dollar, look at this thing, guys. This has just been a straight nosedive. And again, for the very same reasons, US economic data looks to be ramping. That's why the dollar is so strong. And we can see euro dollar continuing to take out those lows. Congrats on that trade, Dre. That's awesome. Shout out Dre in the chat for a very nice short on Euro USD. You nailed it. Thanks. Appreciate you. Great macroeconomics lesson, Nick. Thank you. Yeah, you know, if trading doesn't work out for me, I might just go get a professor job. I'm just kidding. I don't actually think I have the knowledge for that. Although I love this topic, I'm kind of like applied economics, not like theoretical economics, right? Applied economics is like trading, investing, looking at markets and actually using that data. Theoretical economics is probably way beyond my knowledge base. But I would love to learn that stuff. Maybe when I'm like 60 years old and bored, I'll go take more macroeconomics classes and just learn as much as I can about it. Anyways, I took an S&P long trade and it's flopping right now. So this is a trade that's not working out for me. I liked this level of support, and that level of support did not like me back. So it took out those lows here. I'll stop out if need be today, take a loss in the S&P. But I got out of the way of the NASDAQ, which it doesn't sound like much, but it's a slightly less loss than it would have been had I stayed in the NASDAQ trade. So I liked the price action better on S&P. You can see here's NAS. NAS not holding structure here. So I think it's headed to test this area here. 20,400 is another level for the NAS that I'm watching. And we take a look at the S&P. Meanwhile, I liked that the NAS or that the S&P was wicking very well off of this area. And we closed down on this level on Friday. But at the time that I took the trade, we wicked off this, then closed lower. So a little bit of rejection. And that's my signal to go ahead and potentially stop out of this trade if necessary going forward. So yeah, I mean, risk assets taking a little bit of some heat here. Same thing with gold. This is kind of an appropriate reaction in my view to gold prices coming down a little bit. I mean, the dollar is just so strong. Yields are so high or rising, right? This is putting pressure on metals straight up. Gold is down 2.4. I'm sorry, silver is down 2.4% today. Gold 0.75% and continuing to range in this market. You know, you need this week, you want to talk about what gold needs to see this week? You need to see a fresh breakout here. That is what we need to see for gold to actually make a stab at higher prices. From a price action standpoint, you want to know what we need to see in terms of economic data. You need inflation to cool off, right? Inflation is freaking out right now. That's what's it's the U.S. economic data. It's just coming in so strong. It's freaking out everybody, and people are buying the dollar as kind of that safe haven, that way to hedge their bets a little bit. So we want to keep a close eye on inflation this week. We've got the producer price index and the consumer price index coming out later today. So, if we take a look at inflation, right? CPI. Here's our CPI chart. By the way, in the Edge Finder, we added the producer price index, which we can take a look at that now. Here's the producer price index. It's been coming in 3 times in a row. For those who are Edge Finder users, if you see something like this chart, Frank and Giles did a great job building this. Those are 2 of our developers behind the scenes. They color coded this for us, which is so cool. So we have our forecasted numbers for inflation in the yellow dot. So for the last 3 reported producer price index numbers, look what we've got, guys. You've got producer price index forecasted, and then what comes out is higher than expected. And what they programmed this to do is it color codes to the color blue if it's higher than expected, and it color codes to red if it is lower than expected. Guys, we have not seen a miss in inflation, a lower than expected inflation report since September. What we want to see, if you're somebody who wants gold to rise, stocks to rise, dollar to fall, if that's you, what you want to see this week is a red missed forecast on this chart, right? So we want to watch this really close because, again, if we get another blue reading, you're going to have some market participants get a little spooked out there, right? If you have another beat in forecasts of inflation on the producer price index, on the consumer price index, it's gonna scare people, right? Because people are gonna say, look, inflation is bottoming out. We have had in the past 3 CPIs, 2 out of 3 of them have been higher than forecasted numbers. Actually, I'm sorry. They both, on the CPI, they've met expectations, but they've risen 2 consecutive times. So we bottomed out 2.4. The forecast was 2.3. We got 2.4. So we had an upbeat inflation report. Then we had a higher report, then a higher report. So the market, let's see what the market's forecasting, by the way. I'm curious on CPI, what we've got here this week. So PPI, let's look at CPI. CPI year over year, we're forecasting 2.9. So 2.9 is a move up to this level. So that's where we're forecasting. So if that number comes in at 2.9 or 3 or 3.1, the market's not going to like that, because the market's going to say, look, inflation it bottomed in September of 2024. If that is the story, then yields go higher, dollar goes higher, gold goes lower, stocks go lower, and Bitcoin goes lower, right? All the risk assets would not like that. What would be good news for the market would be actually if we got a 2.7, if we flattened out on inflation and just said, okay, well, we're not rising, but we're not falling either. That would be a good start for inflation. Now, if you had a big surprise to the downside, then the market would cheer because they'd say, look, inflation's actually getting under control. But we've got issues, right? We've got some problems to work off in this market right now. You've got, for example, oil prices, right? Oil prices continue to rise. Take a look at the daily chart for oil prices. We've got resistance being tested here, jumped up over the weekend. If oil prices take out these highs, right? Why is this an issue? Well, rising oil prices cause more inflation. So if oil prices start to really substantially break out, we've got to watch that as another indicator. There are several trade setups that I'm looking at going into today. I just want to mention also, I'm going to be watching a lot of US dollar crosses for possible setups that I like on these. So I'm watching the dollar, I'm watching cryptocurrencies, I'm watching indices to see if I can pick up some low prices. I think I might be able to get some entries on those. Any trades I take, by the way, I should mention this. We are doing a 30% off discount right now. So if you're interested in getting the trades being shared inside of our Discord channel, every single trade that we take gets shared inside of our Discord server, and it is currently, for a very limited time, 30% off. But for those of you who are watching the live stream right now, we will do 35% off if you send us a direct message on our website. We just dropped the link here in the chat. Thank you to the producers. If you click this link and direct message us right now, you can come join us, come trade with us in 2025. This is an exceptional year in terms of volatility. We got things moving, and where there is movement, traders can take advantage. So we'll be trading this all year long. If you're not in our VIP group already, take advantage, 35% off by clicking the link and sending a direct message to our support team who's standing by, who can hook you up with that discount while it is available. That is only available for a very limited time. It's our New Year's discount. Come join us in 2025. Let's make it a great year. So again, I took a trade on dollar Swiss. I did close out of dollar Swiss, which let's see how that's doing today. Dollar Swiss still towards the highs. I ended up taking this move here, right around here, took profits right around there. Obviously, I should have kept holding it, but hindsight's 2020. I'm looking for an opportunity to get back into this chart if we get a bit of a discount. If we get some pullbacks on dollar Swiss, I like that as an idea still. And part of the reason I like it is because if we go to the top setups page, the dollar, if you're a currency person, the dollar continues to look really strong on the Edge Finder. So I'm not looking to fade the dollar at all. I'm looking to be with that trend. I've predominantly been on the long side of the dollar for several months now, looking for like euro dollar shorts, pound dollar shorts, Australian dollar shorts, Kiwi dollar shorts, and then bullish setups on dollar CAD, dollar Swiss. And if I take any of those trades, like I said, you'll get notified in our Discord server if you're a VIP member. Analysis for Bitcoin. Yeah, let's look at Bitcoin, see how Bitcoin is doing. Again, dollar pushing through those highs is mostly bad for Bitcoin. So if we take a look at Bitcoin here on the daily chart, I actually like the kind of area that we're entering into. But what I'm not so in love with is the idea that we came down to this 38.2% retracement, this level of support, which was pretty key for buyers. And we're starting to break through that level. So I'm curious to see how we close today. I still like the upside for Bitcoin. I am not, bearish on this at all. I think that we've consolidated and we're testing some lows here, but it's really going to be curious to see how we react. Are we going to bounce off this level, or are we going to take out those lows and continue lower? I don't really know. I prefer the long side here. I think that we have more upside, but it's a risky trade as always. Bitcoin is very, very volatile and can move really quickly. I mean, it could be, up by 2% by the end of the day, or it could be down 9% by the end of the day. It is very, very volatile. And the average daily range for Bitcoin, last time I checked, was like a $4,000 price move per day. So if we were to take 4,000 from here, that means it could go back and completely undo what we've done, or it could take out those lows and be trading down by the 50% retracement by the end of the day. So be really careful out there with Bitcoin. It is a very volatile a volatile chart out there. So I'm going to watch it close and see if I can find some opportunity on that chart. NASDAQ down 1.33%. Again, I'm glad that I got out of the way of this one because it is continuing lower here. We were holding this well for a while. This level of support held nicely, but then boom, down comes the selling. And we can actually see prices pushing lower here. NAS coming down to test this area. I might get stopped out on my S&P idea as well. If it happens, it's all good. It's part of the process. I've had a nice win streak on the indices here recently, but this could be the killer in terms of, well, actually NASDAQ, I took a loss on NASDAQ. So I could take a second loss on S&P 500. It wouldn't be out of the norm. Stop losses happen. Gold here, again, like I said, watching to see if we can get the breakout here. I like gold for 2025, but I don't know that I like it right now. Until that dollar cools off a little bit, guys, I'm not a fan of trying to get super bullish on gold, right? If you get something, one of the biggest things, if you want to see gold touching fresh highs in 2025, you got to break this. This dollar uptrend is problematic for gold. Now, I know gold is not selling off, but what's keeping gold from breaking out new highs, I would argue, is this chart right here. U.S. economic data has come in so strong. It adds like security to wanting to be in the U.S. economy, right? There's so much inflow of foreign investment into the U.S. economy, buying dollars, getting into, U.S. treasuries and stocks and all that stuff, right? That demand for dollar puts pressure on gold prices. So if you get something that unwinds that, and perhaps that's some cool off in inflation this week, right? Those are catalysts that could give us a little bit more interesting story for gold. But right now, be careful with gold because gold is it's in a range, right? The second you think it's moving again, it's doing what we're doing today, right? It's giving back 1% of the move, or, in this case, 0.8% of the move. So we're seeing this false start behavior for gold right now. And again, I don't think that really changes. Also, where did my charts go for gold? Did I lose or is it still like loading? I don't know. My charts like disappeared. But anyways, like I think that you're still kind of just in this false start spot for gold. And until that changes, I don't love the setup for gold. Like if you get dollar weakness that breaks to the downside hard, then you might get this move, right? Then you might actually be setting up for some follow-through moves back to the highs. And I love that trade. What could be the catalyst this week? These two. If these come in cool, then it could suggest that Fed rate cuts are still coming, and gold would absolutely love that. But we're not going to jump to any conclusions. We don't know what CPI and PPI are going to do. If they come in hot, gold struggles, and I think we stay ranging. Right. Gold is holding up well because other currencies are cutting their central bank rates pretty aggressively still. So that's kind of a positive for gold. But the US is holding in real strong, making it really hard for, for anything to happen there. Yeah, Bitcoin wicking off this area pretty well. I got to say, I actually might just join that trade. I'm liking the way price is reacting to this area. Yeah, I think I'm going to go ahead and just join that trade. Bear with me, guys. Give me just a second. Okay. Yeah, I mean, this is an area I like, the 38.2% upward trend line. I mean, it's not really just about the technicals. I like the story for Bitcoin going into this year. Let's see. Okay. I'm going to get long Bitcoin here. I still like the trade idea. The wick off this low, we'll see if that holds. If it doesn't, again, I'm going to stop out. Let me think where I want to put this stop loss. I've got my second monitor pulled up where I'm using the stock brokerage just to calculate the risk setup and stuff. So basically, I'm looking at a move of, I think I would put a stop right there. So that's about a 6.9% move in the price of Bitcoin from current levels. 6.9. I'm going to put us right around there. Okay. Okay. Bear with me as I punch this in, guys. Sorry for the good till canceled order. Let's see. 48.16. There we go. Okay. So I've got an entry on Bitcoin here. 6.9% here. Now I've got to punch this in for members. So give me a second. Any updates I make to this trade, I don't have a target on Bitcoin. I'm going to be trailing stops and adjusting. I might close. So any updates that I make will be shared inside of our Discord group. While I work on this, if you guys would like to get notified anytime I take a position or update a position, like in this case, I'm long Bitcoin, but I will update what I'm doing with it throughout the day. If you are not already in the Discord and you would like to join us, we'll drop the link here while I punch in this order for members. If we could drop the link in the chat, that'd be great. Pop it up on the screen. So I'm just going to get long Bitcoin here. And again, bear with me. Whenever I punch in orders on stream, it kind of slows the stream down. So I apologize, but I got to get this trade in. Okay. So where are we at? We also got the round number 90,000 area. We'll see if that can hold. Okay. Let me also get my chart markup screenshotted here. Okay. Let's see. Bitcoin's still getting a bullish reading overall in the Edge Finder, so we'll take that. Also, what did I just click? Okay, yeah. Okay, re-entering gold Bitcoin position. Trend line support. 90K psychological level. 38.2% retracement from election lows. Okay. US economic data to support a hospitable crypto. Trump stops below structure. Okay. Sorry for the delay on that. Whenever I take a trade on stream, I know it slows it down a lot. I know there's a lot of charts we got to get to, but I had to take that trade. I like that setup. I've been waiting for a flush lower on Bitcoin. We'll see how this plays out. You know, if I stop out, it's going to be below this area of support. So if we just see a free fall here from Bitcoin, then obviously it wasn't a great idea. But my thought process on Bitcoin is I like the risk to reward here. So I've got to stop. I'm looking for a bounce from this area pretty quick. And if it doesn't, then I'm going to take a controlled loss and move on. How do you manage the swap rates for holding trades overnight? I use a Forex. I use a stock brokerage. So I'm not trading on a Forex brokerage. So I'm not trading Bitcoin CFDs. I'm trading IBIT, which is a US ETF. So I don't get charged nearly the fees for holding stuff long term. Like I can hold something for a year and it might cost me 0.7% of the invested capital. So it's way more cost efficient way to trade rather than trading CFDs. So if you plan on holding things longer term, I would highly recommend you consider either switching to futures brokerages, which are still costly to hold things, or you can do what I do, which is I trade on a US stock brokerage. And if you're interested in checking that out, maybe we can drop the link to Webull. It's the brokerage that I use to place trades. If that's something that you're interested in, you can find out more by clicking the link in the chat right there. There you go. You can check out Webull if you'd like. You also get free shares if you use my link. That is a referral link, just to be completely transparent with you guys. If you use that link, it will give some kickback to the channel, and we appreciate your support. Okay, so NASDAQ down 1% still here today. I'm still in my S&P trade. What I'd like to see is we've got we've got US Open happening now. My trading view is loading so slow today. What I'd like to see here is we gotta bottom out quick, right? If this is a false breakout, it's got to happen quick. If it doesn't, if we take out those lows, stopping out on S&P right away, and got to be done with the trade. So I'm watching S&P on a pullback, but if it can't hold this, like if we don't bottom out quickly this morning and reverse and go higher, then it's time to get out of the way. Silver and gold are also on my watch list. I'm not looking to trade gold right now. I actually have a position on silver. I shorted puts on SLV, which is a silver ETF. So preferably silver would go higher, but we'll see where it goes. Why can't you answer chat questions? Give me a little bit of slack here. I'm doing a lot of things at once. I'm streaming, I'm doing my analysis, trying to read the chat, trying to drop links for people that want links to stuff. So if I don't answer your chat question, it's not that I'm ignoring you. It's that there's many of you and one of me, and I'm doing my absolute best. So yeah. I think PPI will give gold pressure. Yeah, we'll see. I mean, if there's going to be something that gives gold a breakout here, like I said over and over, it's the dollar, right? It's weakness in the dollar that would give gold some juice to actually move higher. If the dollar does not chill out, then gold's going to just kind of stay ranging, or worst case, start to go bearish. Why do you enter the S&P without waiting for a bullish candle confirmation before you go long? That's a great question. A lot of times the way the NASDAQ and S&P behave is when they come down to levels, especially in a bull market. Now, hindsight 2020, I should have done what you said. I should have waited for confirmation. However, a lot of times key levels on the indices during a bull market, they come down to those levels and they just rip right off them. So you can actually see this area many times. The best entries were watch this area, target the entry when it happens, and they snap off those lows and rip higher. In a bull market, I don't like to wait for confirmation, because sometimes confirmation costs you more than it helps you, right? You have to remember, like, take a look at this, for example, this wick down, right? That wick, there's a lot of extra bonus in there. If you had waited for confirmation and entered here, yes, you still could have caught a good trade, but a lot of the juice in the S&P, the NASDAQ, is buying it when people are freaking out and selling it quickly. So I actually like to and prefer to trade a zone without confirmation than try to, quickly or wait for confirmation. I know that some people prefer confirmation. There's not a right way or a wrong way, to be honest. There's just different styles. There's different approaches to how you enter. And for me, I don't wait for confirmations. My confirmations are fundamental analysis, right? So I like a setup. I'm just waiting for a level to get hit, and I'm buying or selling at that level, not trying to wait for confirmation, because I'm not a purely technical trader. I trade primarily fundamental macro view stuff. And then, I, from there, just look for my levels that I like. So we'll see. I also have SMH. I mean, I had several things get tested here this morning, and they still could become losers. Like, here's another trade. This one kind of, I'm giving back some gains here. I'm actually floating. So I entered over here on SMH, took it long, price came down to this support level. And when it broke that initially, I stopped out. I re-entered, right? I re-entered, put a fresh stop, smaller position size. So I'm overall positive on SMH recently, but giving back a good bit of the gains here. My entries have not been on par recently, which, hey, you know what? No entry style, no strategy is 100%. You're going to have drawdowns no matter what you do. Have you guys ever thought about this? Actually, I'm sure many people relate to this, and let me know if you have done this chase your tail effect before. You do something and it doesn't work out, so you try a new direction, right? So like, let's say, for example, you say, I don't wait for confirmation, and then it costs you in a trade. So you say, well, now I'm going to wait for confirmation. And then you miss out on a trade that would have been an excellent trade. So you go back to saying, oh, I'm not going to use confirmation because then I miss trades. But then I get bad entries, so I'm going to wait for confirmation. Has anybody done this? Has anybody been on the hamster wheel of trading before? I certainly have. And what I found, guys, is if you do proper back testing, what you will find is that just like if you're a video game player, you know how like if you choose a class in a video game, like if you're the tank unit, like, and if you don't know what I mean by that, if you're not a gamer, like a tank hero or play style is like super armored, super defensive. But what's the give back of that type of character? Usually they're slow moving, right? Or you can be the character in the game that is really fast moving, but doesn't have a lot of armor. So they're like, weak to attacks, right? The point is, choose your strategy like you would choose your hero or choose your class in a video game. That's a nerdy reference, but like it's true. In trading, every single style has a strength and it has a weakness, and there's no unbeatable trading strategy. Just like in a video game, there's no one class that just has everything. In video games, that would make the game really boring. And in trading, it would make it really fun if you could just win all the time, but it's not the real world, right? Everything has a strength. Everything has a weakness in trading. So no matter what you choose, and when, I post videos of me having a losing trade or something, I definitely get a lot of criticism. People say you should have done this, you could have done this, but you have to remember, no matter what you choose to do, there's always a weakness and a strength to your choice. Yeah, no, you guys know in a movie what the most overpowered character is? Anybody know? It's the cameraman. Cameraman never dies. Bitcoin, we'll see. Again, I went long. We'll see if it holds up here. If it doesn't, look at this. My chart analysis is just loading so slow today. I'm not really sure why. Like what the heck? All my beautiful paintings on Bitcoin, they're not showing up. What is this? Come on, TradingView, load. Anyways, mine too, bro. Is this a TradingView thing right now, or is charts like loading weird for you guys on TradingView? I mean, like gold's loading well. Okay, there we go. It might just be my computer. It might just be my computer is saying, Nick, just give us a second. It's Monday. It's a TradingView thing. Okay, facing the same issue. TradingView's been weird too. Either we all have bad computers together, or TradingView's got some weird. Maybe it's maybe their servers are overloaded of people staring at Bitcoin charts. I don't know. Yeah, so I've got several trades that got tested here this morning. I need some reversals and indices. I need some, otherwise I'm gonna have to stop out of some ideas. My ExxonMobil, like I've got a lot of trades that are in the red. I've got a lot of drawdown positions right now. And you guys know, like I don't shy away from showing drawdowns on my streams and videos. Like I always show you when I got a trade that's not working out. Here's my worst struggle right now. It's TLT. I've been fighting this battle with yields rising. It's been really struggle. The struggle bus is real for TLT. But again, I kind of think, and I'm going out on a whim here, I think that yields ripping like this are a little bit overdone. And I'll explain a little bit of my thought process on this too. Nick, are you still in EG? Seems like the pound is showing some stabilization after New York. Mean reversion still valid, but UK government is a big concern at the moment. Yeah, James, I am still short euro pound, and I've got several levels that I'm looking to potentially scale in. But one thing I think we differ on, James, is I have this initial short on euro pound. What we differ on is I'm just way like high time frame with this stuff. So like if we go take out these highs again, like if we get back up into this area, that might be my second entry. But then from there, my third entry might not be all the way up to here, which could mean that I could be sitting in a position for hundreds and hundreds of pips against me. That'd be 250, 270 pips. I would like to build a position on this. Like I like the long-term downtrend. So it's more of a long-term dollar cost averaging for me. I mean, that's the thing with dollar cost averaging. It can very quickly turn into long-term, but from the beginning of this idea, I like euro pound to the downside, but I could be really early on that idea. I'm a premium member and I can't gain access to the Discord. James, if you need some help with that, we'll drop a link here in the chat to speak directly to our support team. We can help you out with that. And for anybody who is not already in the VIP group, every trade that we're taking right now is currently on super sale. You can currently see everything that we are trading, every entry for 35% off the usual prices. You can try it for a month for 35% off. It's like super low cost. Come join the action. Come trade with us. It's an exceptional time of year. New Year's trends are everywhere. We've got the Fed meeting coming up. We've got inflation data coming out. We are absolutely firing on all cylinders in terms of setups and ideas right now. So if you're not already in the group, come join us. It's 35% off right now. Click this link to send a direct message to our support team. We're standing by. We got 3 people in the office who can hook you up with that membership discount and give you some information about the group. If you would like to see past examples also, by the way, if you're somebody who's like, I'd like to see some examples of what the trades look like, what do you trade, all those kinds of questions, just shoot us a DM on our website. Go to a1trading.com or click the link in the chat and you can speak directly to us about getting that discount and any questions that you might have about the service. NAS still down about 1% here. So not making progress in either direction here. NASDAQ, take a look at the 5-minute chart. You can see chopping around here a little bit. But I was making a point about yield, so let me come back to that. So my TLT battle, somebody said something in the chat that was good. Nick, you better hope for a recession if you want to see TLT go up. That's a good point. And so here's the thing, Royal Trades and anybody else who's wondered about the TLT idea. TLT is a bit of a hedge in my account, okay, to potential recessionary stuff. Let me show you why. Obviously, this is a bad entry, and I'm just dealing with some drawdown, and I'm going to just continue to hold this. It pays a dividend to hold TLT. You get paid every month a dividend, which is awesome. Basically, you get paid interest for holding that bond position. That's how bonds typically work, but TLT is an ETF that holds those bonds on your behalf, holding traditionally long duration treasury bonds. Let me show you something TLT saw in 2018. Now, TLT has gotten crushed in recent years with heightening inflation, but I want to show you 2018. Now, 2018, does anybody remember what was going on in 2018 that caused the stock market to sell off and the bond market to rip higher, even though prior to this, TLT had been trending down, right? So TLT trending down, yields rising. Something turned that dramatically turned the ship around for TLT. And when I say dramatically, I mean dramatically. Look at what happened to TLT from this November low up till what we saw in COVID, up 65%. Of course, that's a very unique time in markets. Does anybody know what was going on? Ta-da! Royal Trades is on it. Royal Trades knows his or her stuff. Yes, during this time, the Trump trade war went crazy. There were escalating tariffs on China, and China was firing back on the US, and there was fear, right? True fear of a global recession. Because when you mess with trade too much, when it disrupts the whole system, it can be inflationary. It can also be bad for growth. Stagflation fears became pretty real. So look, TLT rips higher. Well, actually, inflation may or not have been. The bigger question was, are we going to go into a recession? And that fear alone caused TLT to skyrocket. So although I'm not necessarily like fully convicted, oh, TLT is absolutely going to go up, I have a portfolio. So a lot of traders, they trade on like a futures brokerage, or they're day trading, or they're scalping on a Forex brokerage, a CFD brokerage. I'm more of a swing trader and a position trader. So what I do is I have a stock market portfolio. So I have long exposure to stuff. Like for example, I just showed you my semiconductors trade. This is a trade that only works if the economy is doing well and growth is pretty good. I've made good money on SMH. Doesn't look good right now, but I've made a good money on these rips that we've seen recently. My point is, I have a lot of growth exposed parts of my portfolio. So to counterbalance that to any surprise trade war fears, tariff wars, stuff that could go on, I have some TLT in my portfolio. Now, again, my entry timing, terrible on this, but it's not really a timing trade for me. TLT, go to the weekly chart, look at the, kind of getting overextended here to the downside. I essentially have a position. I built it off the daily chart. So, daily chart to me looks a little oversold. I mean, it's been oversold for some time. And if you get something about growth concerns in 2025, TLT potentially is a savior. So again, I may take a loss on TLT. I may lose money on TLT, but I like having it in my portfolio. I take a portfolio approach to how I trade. So when I'm trading long NASDAQ, sometimes I'll offset it a little bit with something that I'm holding in the background, like TLT. Does that make sense? So TLT would do well if recession fears and growth scares came out of nowhere. If the tariff stuff caused recession fears, TLT would look silly until that happens. Does that make sense? Type yes in the chat if the portfolio approach makes sense to you. And I've been encouraging people that are, struggling with the super active scalping and day trading to at least consider, if you're a fundamentalist, I personally think that fundamental analysis plus swing trading is just superior. Now, I might be a little bit biased because that's what I do, but the portfolio approach is cool because what you can do is you can build your team essentially. When you're talking about building a portfolio, I'm not a buy and hold investor. I am a trader, a position trader. Nothing in my account is just you buy it, you never touch it. In my main trading portfolio. That being said, I have position trades, which means I could hold something for a year. I could hold something for 6 months in my portfolio that helps to serve a purpose on the team. Within a team, you've got, if you're talking soccer, right? Actually, I shouldn't do this because I don't know much about soccer. You've got the goalie, and then you got all the guys that run around the field. And I know I just offended 1,700 Europeans, but the thing is, with every sports team, you have people who play certain roles. So TLT right now plays the role of recession hedge in my portfolio. Is it swap free? So yes, TLT pays me to hold it. It pays me a total of, it's not much, but it's something, 3.91% per year for holding it. So my money being parked here, I collect 3.91% in dividends. Like I said, if you're interested in Webull, we'll drop the link here in the chat. If you want to check out the brokerage that I use, we'll drop that once more. You can check them out. It's the one that I personally use. So let's get back to less boring stuff. TLT is really boring, but it plays a not so boring role in my portfolio. And again, I would encourage more people to just consider the portfolio thought process rather than, your whole account is just day trading, scalping. Cool. I find that to be really hard. I don't day trade and I don't scalp. I'm not saying you can't do it profitably, but I swing trade and position trade, and I found way more consistency when I switched to that model, several years ago. That's why, when you pull up my streams, I'm looking primarily at the daily chart and the 4-hour chart. I really want to learn about the economy. 17-year-old dropped out for trading. I'm not trying to hurt your feelings on this, but here's some genuine thought process. Trading can't be your full-time thing unless you have a substantial amount of capital. And at 17 years old, unless you started some businesses or you have a bunch of money stored up, it's going to be really hard to trade for a living off of no money, right? If you're broke trying to trade, it's really, really hard. And I'm not saying that because I understand the struggle of not having a lot of capital and trying to trade with it. It's really hard. So my opinion is you should find some sort of other source of income and start stacking your capital basis. If you don't have capital, trading is going to be really hard. And that's just what the industry won't tell you, because you're going to try and make big gains on a small account and it's going to likely blow up over and over and over. North of 6 figures. Okay. So if you're working with a larger capital basis, I still think you should get another source of income so that you take some stress off your trading and then make your own mind from there. You know, if I didn't have some other source of income, I have this YouTube channel and I have a software business. So I will be the first to tell you, I do not make all my money trading. I do make money trading. I've been consistently profitable for a number of years, but having other sources of income takes the stress significantly off trading to try and produce something every month, right? I can go through a couple months of drawdown and not feel like I'm going to, die because I can't pay my rent, right? So that's important that you set yourself up for success. So find some other source of income. I think it's really important. And then slowly grow your trading account. Take it really slow, slower than you think you need to take it. That's my opinion. Yeah, seriously, that's fantastic. If you have 6 figures in payouts, that's phenomenal. Good for you. You're doing something that 99% of people dream to do. I don't have that kind of payouts in prop firms, though I don't really trade them. I did it the old-fashioned, boring way. I've built up trading capital over the years, starting businesses, and I mean, it's not boring. It's actually kind of a thrill. I love entrepreneurship, but there's no shortcuts in this game, man. This is a lot of work. It's a lot of, but if you're somebody who's like, I want to trade for a living, don't do it until it is so easy for you to sustain yourself off of your trading gains. If it's anywhere close to like my rent money's at jeopardy, not going to work out because you're going to be stressed out of your mind. Who wouldn't be, right? Nick, why doesn't the Edge Finder show institutional holdings of gold in COT report? It only shows money manager holdings. Adult gamer, let's see what we're looking at. COT data. So what the COT data shows us is the commitment of traders data within the Edge Finder. It shows us, which sorry for the slow loading. I can tell my computer's working hard this morning because everything's loading slow. There it is. So gold, what we're looking at here is the non-commercials within the commitment of traders report. We source for, these are your hedge funds, small banks, large reporting institutions. They're super long gold. They also added more gold longs in their latest week filing, although I believe this is out of date. It's okay. Last updated January 6th. So this is up to date COT report stuff. COT report comes out once per week. So we'll see. Nick, do you teach beginners? To be completely honest with you, I don't consider myself an educator in this space. I don't consider my YouTube channel to be a how-to trade YouTube channel. I do trade and I share my thoughts and analysis of the markets all the time. But I always say this to be real with you guys. Like, my goal is not to teach you how to trade at home. I don't know you, right? I appreciate you watching my videos and my content, but I'm a trader. I really do this stuff every day. I love sharing my thoughts and what I'm doing in the markets. And if you learn something, amazing. I'm thrilled. But my goal is not to be an educator. My goal is to just really do this thing, trade this stuff, and maybe show by example what I think profitable trading can look like. So no, I don't teach people one-on-one. I don't coach people. I think that's an honorable role, people who do that, but I just do my thing. BlackRock has launched a new Bitcoin ETF on CBOE Canada. Interesting. I took a long position on Bitcoin this morning. We'll see if this can hold. You had this little wick through the lows, and then when it started coming back up, I like that entry. You've got this trend line here that looks really solid. This support level may still hold. We'll see. And overall, it's in an uptrend. Even if it's taken a break here recently, I still like the risk to reward at these levels. I put a stop below this low. And any updates that I make, I'll update you guys inside of the Discord. So let me just show you what the initial trade looks like. So I took a new trade this morning, about 30 minutes ago. And this is a swing trade. So this could go for 2 days if I get stopped out, or it could go for 2 weeks if it goes well. So I'm trailing the stop from here. If it can make a bigger push, then excellent. And if it doesn't, it is what it is. What are the advantages of a stock brokerage, Nick? There's pros and cons. The pro, trading costs are low, holding costs are low. You get paid dividends, and you can do options on it. Those, to me, are the reasons I love stock brokerages. The downside of doing ETF trading, which is what I do, like I'm trading IBIT. Like this is where my position is. IBIT, I am long IBIT, right? So I'm not trading BTC USD. I'm not trading a CFD of that, right? If you're trading on a Forex brokerage, that's a contract for differences. So I'm long IBIT. And the pros here are I could sell calls against my position if I wanted to. I could reduce my position sizing. Like I have 4,000 shares. I could take this down to 2,000 shares and put the capital somewhere else if I wanted to do that. I love that. I love the portfolio approach so much more than trading a CFD brokerage. If you're doing that, like I'm happy for you to do your thing. I just like having a portfolio because I can mix and match and really build my team like I talked about with a portfolio. And it gets confusing because I'm not a long-term investor per se, but I have a long-term outlook on a lot of things that I trade, and I'm just kind of trying to get in, get out of what I want, right? I'm active. I think the best way to explain my trading style is it's a mashup between short-term trading and active investing. And what is active investing? It means you're reevaluating your portfolio on a monthly basis, right? In just a second, guys, you're gonna hear from Chris Pulver, who does a very similar approach. We have portfolios that we're managing. On his perspective, he manages money on behalf of clients. I don't do that. I just trade my own money, but I still take a portfolio approach, right? I'm managing and investing my own money. Good trading is investing. Good investing is not necessarily trading, right? So think about that. But you have to remember, if you're somebody who is taking a portfolio approach, an active manager, an active investor is not necessarily taking a trade every 30 seconds like a day trader or a scalper might do. But an active investor is regularly checking back in on things that they're invested in, saying, do I still want this in my portfolio? And if I don't, I need to cut it out of there, right? So that's the difference between being a passive long-term investor and an active investor. Active investors are constantly watching their holdings and administering whether they want to keep them there or cut them out. So in just a second, we're going to take the stream to our next host, Chris Pulver, who, by the way, we've got a membership sale that just kicked off. We're doing 35% off everything in our VIP membership sale. So you can currently get 35% off of our VIP signal service. If that is something that you're interested in here, we're about to take a quick commercial break. Send us a direct message using this link right here. Let us know you saw this stream and that you want to get 35% off of our VIP memberships, and we'll give you some information on that. Also, if you're a fan of the show, Chris Pulver's signals are also 35% off for this very limited period as well. We're doing some sales to kick off the New Year's. Got some New Year's discounts for you. We're going to take a quick break, guys, and then up next, Chris Pulver is taking over the show. Stay tuned.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. Busy Monday, and just want to take a look at a little bit of everything. So I'm dealing with some assignments. Had to spend the first about 35, 40 minutes of open today, resolving some things. So I've got one account that I'm still waiting for a settlement. I had a credit spread that was assigned in the SPY over the weekend, and I had to get into the accounts, settle in some long puts, settle in the shares, and I'm opting to not keep the shares this time because just taking a look at where we are at. Here is the last few weeks of trading. So we have our all-time highs in the S&P. Let me mark this in black. So we have all-time highs in S&P, retested but failed. Now we're coming into holiday trading. There's your FOMC smash, the PCE low, the holiday retest. That was your Santa rally right there that faded hard. Retested the same low, came all the way back up to the same level and area again, and then we got through another rejection. So we're sitting here just below the PCE lows and just below the holiday lows, and it looks like, oh my gosh, this market might be, yeah, it might be fulfilling a head and shoulders pattern, right? So we have this low and this low. If this is a head and shoulders pattern, there's two ways we can measure this. I've already measured it. We've already talked about this. This is weeks ago, okay? But I measured out a potential symmetry level, which would be my high to low right there. And then you have your lower high to lower low. Okay, so that means on a symmetry correction, there's not too much further that the market would go lower. Like literally today's low is pretty darn close to in symmetry. Maybe that's enough. Now, the scary part would be, okay, there's potentially more downside potential if this market is going to fulfill a head and shoulders pattern. You take the high to low, and then you get a break of the neckline, which would be today's pricing based on the little flirtatious move on Friday, breaking the neckline. If we break the neckline, this would be the SPY measured down to around 553. Okay, 553. Now I said like 550 to 560 would be like a nice little head and shoulders window, or I said around this 575 zone to fill the election gap. So there are two levels right in here. We've officially closed the election gap, and the question mark is, are we going to go down to fill a head and shoulders pattern? If this market snaps back up and gets on the right-hand side of this trend line that I draw right here, then I think we're putting in a near-term bottom. So this could be like what looks to be a head and shoulders, but doesn't actually materialize to sell off any further. Okay, so it is a really important spot to watch for today and for this week, because tomorrow we have PPI data. Wednesday we have CPI data. If you remember what happened last time we had CPI data that the market really reacted to, we saw one of the biggest intraday moves that the market has had in like decades. Okay, it was the Qs went like 1.8% lower and 3% higher. The SPY went like 1.5 lower and 2.5 to 3% higher, all in the same day. That was during a CPI event. Okay, so we could get a lot of crazy crap happening this week. So buckle up. All right. So we have a nice little pullback from the all-time highs. We're down about 5% or so on the SPY. Down about 5.5% on the SPY. Okay, Qs are down, I think, like 6 to 7%. So we're down about 7.33% on the SP or the Qs. The Dow has been, beat up worse than the others. Percentage-wise, it's probably not as bad, but it's been the worst as far as directionally. This is down 7.3% as well. So the Dow's down 7%. The Qs are down 7%. The Russell gave back all the election gap candles and then some. So this is your election gap. Russell has continued to push lower. This one's in double digits as far as correction goes. So the Russell is down about 12.7%. All right. So index wise, I mean, Russell is the more discounted index. My concern is that, do I love small caps right now? Not really. For income trade, sure, but not for not for long-term investing, I don't think. We'll see. Anyway, so there's my SPY. You can see the trend line I just drew. I just connected the dots on these recent highs. So this high, this high, this high, right? If you want to be confirming that we're kind of putting in a low, I would wait for this trend line to break. Okay, if we head lower, that's fine. I've got my measure move towards my head and shoulders pattern. So I'm going to put this on my chart. This will be a head and shoulders measured move right there. All right, so I'm going to keep that yellow box on my chart. Today we officially filled the election gap in the SPY, And today we are getting closer to filling. We're not quite there yet. This is the election gap on the NASDAQ. There's the election gap on the NASDAQ. We came very close to filling it right after the election, but we had proceeded to go to all-time highs in the NASDAQ. So if we're technically going to fill all the way, okay, all the way, then we still have a little bit further to drop. This would not necessarily be measured like a head and shoulders trade. The Qs are acting a little bit differently, but I would say the NASDAQ would be maybe some symmetry correction somewhere in here. So if I go from high to low, look at that as a little swing. We go to symmetry, we're hitting that today. If we go from, I mean, that would be about it. I mean, if the market's going to, kind of measure this as a head and shoulders and call this a neckline, then we might have the Qs not only fill the election gap, but get down to like 480. So put like a 480. So head and shoulders measured move would be around 480. And I don't know if we're going to get there or not. We might. But again, if you zoom in, take the trend line break, let's see what price does this week. Okay. If price proceeds lower, then we're having this conversation on markets looking to fulfill the measure move. If we have price, rip back up here and find a gap and get into the right-hand side of this trend line, then you can look at the market putting in, a near-term bottom, maybe right side of the trend line confirmation, and then there's more room for the bulls to head up. But you can see there's lots of hurdles now for the bulls to overtake. We have gaps that the bears have been creating. So we have this gap for the bears that have been created, this gap today that the bears created. The bulls, even if they pull back, there's a lot of structure in here now that I would say, man, unless the Qs get greater than 515, I'm really not that bullish on it right now. That makes sense? So I think if we have more of a discount, I get a little bit more bullish into my deeper exponential moving averages. So here's the NASDAQ on the daily. Okay, you can see that structure I talked about the last week or so. That low is breaking, that range is breaking. Now that we're safely below that, do we fall back into the 144 to 200 moving average? Okay, there's an election gap fill at 492. Do we fall lower than that and actually come and test the structure? Look at my previous lows. Okay, we had support here. We had support here. We had an August 5th bottom there. We're pretty well supported in these dynamic moving averages. Now, if we come back to the 200 moving average, I am pretty interested in a bullish trade. If we come back into, this structure that would basically be like support through the August 5th low, it'd be a little bit lower than the 200 EMA, but man, that would offer up a really healthy, like probably 15% discount. Yeah, that'd be like probably 15, 60% pullbacks. Now, is that enough to say I want to get long the Qs? I mean, it's enough to get long on defined risk, because if the market is going to put in a near-term bottom, and I'll say this, if there's any way that the NASDAQ is going to carve out gains this year, right? We started the year right here. So if I put in any trades and by the end of the year, we're back into positive territory, that gives me some upside potential to put on some risk, right? So if the market is going to finish for the year positive, then I'll just put on some trades, right? But timeline wise, I might consider going out to like the end of the year. I might not fudge around with like a 30 to 60 day move. I might go out and just say, look, I'll go out 9 months. I'll go out 12 months. I'm just going to put in a trade out 12 months. And maybe that's, it's not a lot of income up front, but it's a safer play for the timing. Does that make sense? All right. So, and look, if you are like not enjoying this little, 7% correction, 5% correction, then you're trading way too big and you're way too leveraged, because for this, we've been waiting and wondering, will this happen? And this is maybe just getting started. I think it would be an easier trade to position yourself for 2025 if this market is down, let's say, 7 to 10%. If the market offers that as a discount, that is a good way to get started, to have some decent upside potential to claw back that 7 to 10% and get into positive territory. That's a pretty easy trade. But if the only way you make money is if this market goes higher and higher and higher, then you need to learn how to trade different, because we're in a phase where after having a 2.5-year bull market, after a 15-year bull market, you got to be able to look at this and say, there's room for this to fall. I hope that it does. If this is going to continue to decline a little bit, fine. Okay. But there will be forces in the market that will start pushing this thing higher. When the dust settles this week, let's just make a note here. Today is Monday the 13th. Okay, when the dust settles on Friday's close, where are we for the week? I don't know. Are we going to be lower or are we going to be higher? Would anyone be surprised if the market like spikes down here and then spikes up here, and then we end up showing some positive gains going into like the next maybe 2 or 3 months? It's very possible, right? So it's just one day that leads into another day that leads into a weekly candle that leads into where we're looking like things are going. But I think an easy spot to look at would be this. If you're waiting to get a little bit more bullish, a trend line break would be nice. If you're waiting to get a little bit more bullish, a trend line break would be nice. Be aware of these measured moves. So the SPY falling back to around 555 to 552. I'll put that on this note here. So we'll say 555 to 552. Okay, and then the Qs measured move would be around, I'll go like 480. I'll go 483 to 480. 483 to 480. Okay, now I can be like super exact and say, no, that's the measure move at 479.98, whatever. Obviously, within like a dollar or two, I'm saying that's pretty close, right? Because price can come in and like spike that level, but I just kind of want to set some chart alarms where if it's close enough, then I might start looking at some defined risk trades in my options positions. Okay, all right. So we got that going. Anything happening, and we'll just go top down here. I do have a hard stop this morning at 11 a.m. Okay, so I'm gonna wrap things up here in about 28 minutes. I've got another class at the top of the hour, but I want to go through everything else. Let's take a look at currency strength. Currency strength on the day. Surprisingly, there's not a ton of volatility. Japanese yen showing some strength this morning. The Swiss is a little bit softer. Euro and pound are down as well. Japanese yen a little bit stronger. That's about it. So I'm not crazy impressed with the amount of volatility in Forex. There's not a bunch. So it's kind of I'm not going to say a nothing burger, but I'll take a look at some of the currencies in a moment. What else? Volatility is up today. So we gapped higher in volatility. Don't be surprised again to see volatility being sold. It's a mean reverting instrument. So if we have a gap higher and it gets filled this week, we might be putting in a near-term bottom. I'm just be cautious. Like we might flush down on PPI or CPI, and the market reacts and bounces off that, uses as a catalyst to kind of rip and fill some gaps. So if we have like a big move on CPI, PPI, and VIX spikes up here, I'm probably selling some volatility. The one thing I could do would be maybe I was gonna say I've got some puts in here. Let me see what this SPXY position is. Let me double check something here. SPXY. They're all done. They're all profit. Okay, so I have zero exposure now to SPXY. Okay. I might buy some shares of this. Maybe. If I buy some shares, let me take a look at this. If I buy shares right now, I don't think it's a good enough spot. If I buy shares, I'd have to put in a collar trade. Let me see what that would look like. If I buy shares of SVXY and I pair that, come on, man. Why won't this account close? I've got 2 contracts I need to fill on this account. All right, let me take a look at this. So SVXY, if I buy the shares at 47.32, let's say I go out to the end of February. So I buy at 47.34. Could I sell? Premiums are not that great. This is probably the only deterrent of not buying the shares and adding options on it. If I buy the shares and I sell, you've got to be kidding me. These put premiums are off the charts right now. Yikes. Okay. That trade's probably not going to work then. I was going to say if I do a collar trade, if I sold a call here and I bought some put protection, it's going to cost me a lot more money. Plus the bid mid ask is like really, really wide. If I went out, that's up $1.70. Even if I went out like $3, I mean, I guess I could get a credit for it, but I don't like it. I'll pass on that. Usually, if we have like a big spike in volatility, so when the VIX spikes up, I'm usually looking to buy SPXY or SVIX. I like SPXY a little bit better. Okay, so if this spikes higher, I might take on a quick position in SVXY. But this also might revert and put in a near term. What I did do this morning is I did sell some premium. So dollar index. Hey, what do you know? We're going higher. As we thought, as we said, I said, don't fight the dollar. Now that we've cleared this this big like 109.50 to 110 pocket, this dollar is probably still in a nice little trend. We're probably heading down towards parity on euro dollar. Okay, we're at fresh lows today at 102. I mean, I hate trading this thing already only 200 pips off of parity, but I think I kind of have to. I don't have to. I don't have to do anything. But probability of hitting parity at this point is fairly high, I think. Let me check something. Are we oversold? Are we divergent? Let me find out. Let me pull up another workspace here that I have. Let's go harmonics and pivots. So this is another workspace that I use. Let's go to euro dollar. Okay. So euro dollar on a daily time frame is starting to show, ooh, not a bad trade there for the old yearly pivot, 106.30. Oversold conditions. We had a little spike there on the euro dollar. We have a big fat pocket all the way down here. Some really nice demand levels from just above parity 1.008 down to like 97. So I could see the euro dollar still pressured to the downside, falling in this zone. This is where I'm looking for the buyers to step back in. Okay. So what am I noticing here? Well, on the daily chart, we have some lower lows in price. We are seeing some disagreement in momentum. We have some lower lows in price. We have some hidden bullish divergence on relative strength. Doesn't mean I want to call the bottom. Okay. Doesn't mean I want to call the bottom. Doesn't mean I want to call the top on DXY. But man, it's getting closer. It's getting way, way, way closer. Weekly chart. Now, this is interesting on the weekly chart. We've been heading down on the weekly chart, and we are still heading down with momentum, and we are still heading down with relative strength. The weekly chart might be a little bit more in control with where this thing settles in. So if I'm using an indicator on the weekly chart, I would say that if the weekly chart hits oversold conditions, okay, maybe looking, I didn't mean to do that last one, oversold conditions, maybe looking for that to line up. It still doesn't mean there's a bottom, right? Like we could have oversold conditions. This market might like spike down and then put in a bottom, but just be on the lookout for it. I still like the idea. So I'm probably not going to sell euro dollar right now. Okay. Although I would love to, but I should have been selling it at 105 to go lower. I should have been selling it at 105 targeting parity. And now I'd be deciding, okay, I'm up 300 pips on my position. Do I start protecting profit? That's a much better conversation than should I sell it at 102 to chase the extra 200 pips to parity? I mean, it's okay, but I'd rather wait and see if this thing hits parity and lower. I'd rather start scooping up some buy orders. I'd rather start scooping up some, demand levels and then see if this thing can come back and find some really good structure at that 105 to 106 handle. That to me is a much better trade. And that's a kind of a topping point in the dollar index. And so I think that's a much better timing trade versus trying to just chase right now. Okay. Meanwhile, dollar CAD, did we hit my profit target? That's right there. It's right there. Let's go. Dollar Swiss. Okay. This one's 9 pips away from my profit target. Hit it today. Hit it this week. I'm ready for dollar Swiss to be done. It's got to be close. Let me set a chart alarm at 92. Dollar Swiss, all positions close for profit. So when that chart alarm goes off, hopefully it goes off this week. Good stuff. All right, what else? Oil. Let's go back to the daily chart. Okay, I'm going to get rid let's go back to this workspace here. Oil, another spike to the upside. This is on geopolitical stuff, OPEC controlling supply and demand, Russia sanctions, oil prices are heading higher. This is certainly with last Friday's candle. That's a more convincing move that the bulls are in control for the time being. Okay, does this make CPI data a little bit stickier? Yep. Right. So, how nasty, how high does oil get? I don't know. If you're long oil, you're happy that you're long. That's it. Like, I don't have a trade on oil. I'm not long. I didn't trade CL futures. I did all my trades back here. All my trades on oil were bull call spreads for profit. That's all I did. I'm not in oil right now. I'm just watching to see if oil goes higher, how ugly does inflation get in the US? PPI tomorrow, Wednesday CPI. Look at the calendar for the week. They're all forecasted to be higher. Okay, so let's go to Tuesday's news. Tuesday, 8:30 should be PPI for the US. Here's your forecast. PPI year over year. Look at this big jump. Previous print year over year was 3%. This is showing a forecast of 3.4. Are you freaking kidding me, man? Like, that is higher purchasing. What's PPI? Producer Price Index. So you got the PMI numbers, the Purchasing Managers Index. PPI is Producer Price Index. If that is higher, again, just another tip in the cap of higher inflation. Look at CPI, or the core PPI year over year. 3.4 is the previous print, forecast at 3.7. Both measures looking higher. So not a good look. Okay, we'll see what that prints this week. Going to Wednesday, 8:30 a.m. You have CPI data. We're looking at core year over year. Previous was 3.3. Forecasted is still 3.3. CPI previous was 2.7. Forecast is 2.9. Again, still looking at a higher move. Not a good look for inflation. Let's go to a third-party inflation measure. We were at 2.93 last week. Now it's up to 3.04. Again, looking like it's going up. Are we going to break these highs? I don't know. We're going to find out. What's the 10-year doing? What's the 10-year yield doing? 10-year yield today is up. Okay. I have seen forecasts with this thing going up as high as about 5.5%. That's not good. I said above 5%, something breaks. We have a look. To me, if we're greater than 5%, this is risk off. If we are greater than 5%, something will break. So we could have bond market. We could have major risk off event. That is a big wall of worry, in my opinion. Okay. So how aggressive does the market react to it? I don't know. We're about to find out, because it doesn't seem like this is slowing down right now. So just something to be aware of. All right, what else? Oil, gold, silver. Gold. Actually, let's check natural gas. Spike up to fresh highs in natural gas. A lot of volatility. I'm long UNG with basically a longer term diagonal spread. So I bought the $5 call, selling the 23. My break even's around 16.25. So this is an income trade to April. If we get up into the 20s here, I get this called away for like $600 or $700 per contract. We'll see. I'm looking to see, like, if this inflation stuff and energy price is going. The U.S. right now is one of the biggest suppliers of natural gas to Europe, more so than Russia. So I don't know. I mean, it could be just a supply and demand trade, and also, natural gas for really, I mean, all of like 2023 to now, it's just been making lower prices. Look, on the daily time frame, this is the first time in a long time that we are now above a 200 moving average. That is a long time, right? Like, this thing started into a bear market after topping out in August 2022. We've been in a bear market basically since October 2022. So that is a 2+ year bear market natural gas. And it was just a matter of time where are we going to see price finally start to make a, higher low and higher high. And it's just now happening. So if this is a reversal that's underway, you can see here, there's a lot of potential upside for natural gas. I wouldn't be like crazy bullish on this unless something is breaking in the supply chain. But even for a, 1, 2, 3, 4, 5 wave move, coming back into this structure here, somewhere in the 20s. So I mean, if I turn this trade into, I think I'm in like 6 to 10 contracts long, and so if I turn, let's say, what would be that break even? I've got $18. So $18 max profit here, paid $11.25. So that gives me $6.75. So I'll just use a simple number like 10 contracts. So that's $67.50 in profit. $67.50 in profit on about 10 accounts. I mean, that's a good chunk of profit. I don't need price to do anything wild and crazy. I just need price to go up a little bit. So we'll see if it does it. But it's a trade that I've given myself plenty of time. I went out to 2027, but then I'm selling against it something aggressively because the premiums were pretty decent. So we'll see if that's a play. Gold. It looks like gold is red on the day. Red on the day. I'd still like to see, especially if the dollar, this is interesting that gold has stayed bid and dollar's getting stronger. Is this a bit of a fake out trade in gold? Maybe. This could be like little noise. This could be, breaking higher to test the highs again. I'd still love to see gold give me a pull back into here. If this is like range bound gold, I'm good with that. If this is a high, low, lower high to lower low in gold, I'm good with that. But it seems like right now gold is maintaining a pretty good bid price. We did form a higher low right here. Watch that structure. Watch that structure for right now. Okay, if it breaks above the highs, I'm not necessarily adding to new highs on gold. What I might end up doing is taking some GC futures trades to see if we get to higher highs. Otherwise, I think gold is just good to have in the portfolio and stay long. Bitcoin down 2% today, gold's down 1% today. Market's gapped lower. We're actually doing a pretty good job of filling today's gap. It's close. So anyway, keep an eye on gold. I still like silver. Silver's down, but I'm looking at major support around $26. Bitcoin, little spike down to 89.2. Kind of getting bid up right away, but I'm going to keep an eye on this one. I have a measure move, high, low, lower, low, measure move to 87. Potentially a little, added volatility down to about 80K, and I'll add more Bitcoin / probably IBIT, most likely. I do have some trades running a micro strategy. We're at 320. I'm going to get it called away, I think the first week of February at 305. And I might maybe this week take a look at this and do another roll. If it pays another, $2, $3, $4, I might just do another roll for another week. Let me see if that, I'll look at it right now. So I'll look at MicroStrategy really quickly. MicroStrategy, I have the shares. There's my 305 by 245. And let's see. If I roll this out another week. Oh, no, I'll close this. Okay, so if I roll this again. So the 305 by 245, if I roll it out, nah, I'm not gonna do anything. That's another $2. It's okay, but I'm just gonna try to let this one get called away. It's like $2,000 in profit. I'll let it get called away. All right, coin. See what happens there. Ethereum staying above. It's actually back below $60, so I'm happy that I closed out. Good. I closed out at. I needed price to stay above 60 by literally this Friday. So I had a 117 expiration. It was a 60 by 40 bull put spread. And I collected on that trade like $7.50. I closed this thing out for a 50-cent debit last week. So I still grabbed $7 of profit per contract, and I need a price to stay above 60. Well, right now it's at $59.99. If price goes lower, then I'm running into chewing into my profit and also taking out potential assignment, which I didn't want to do for this. So I'm happy I took the profit. All right, what else? Copper. Copper's up. Interesting. Copper's up, but China's not doing anything. Not to what I saw. Japanese yen still choppy on the Nikkei. Japanese yen. Let me see 6J really quickly. Where's my Japanese yen futures? Starting to show a little bit of strength there. It's not quite at the attractive level I'm willing to throw some trades in it. Let's go DAX. Look for some dynamic support in the German index. FTSE. I don't know if we're going to make all-time highs, but probably range-bound. I mean, I think you can see some pretty clear horizontal levels here. So, if it comes down to the lows, tight stop loss. If it comes up to the highs, maybe fade it. If you can trade some options on this one, maybe some iron condors or strangles. Argentina. Hopefully we have it. I'd love to see a topping pattern. I don't want to sell it. I'm just saying, like, pull back here. Little pullback here, find some support, then I'll get long for resumption Argentina long. I'll just dollar cost average into this ETF. China, Brazil, Apple, Mag 7, big gap lower on Apple. Holy shnikes. All right, let me check and see something here. Apple. This week, anything attractive to the upside? Nope. It's all lower right now. Looks like the market's kind of dumping some Mag 7 right now. Amazon heading lower. Wow, Apple's getting dumped hard. Why is Apple so bad? Fresh EU scrutiny over App Store fees. Man, leave it to the EU. So big gaps to the downside on Apple. I would just still look at this one. I put in this trade last week for the Pulver Alerts, 210 by 205. Would I take some shares of Apple? Yep. Would I take shares and own them at what? $198? Yes. So if I owned Apple at 198, I get a 25% discount, 24.5%. I'm totally good with that. Until then, I'll just try to generate some income. Amazon, own some shares, have it collared. Google, just some trades out to March and in May right now for income. Meta, looking to see if we have a little bit more of a pullback into this 200 moving average. Microsoft, positioning for a lot of income down here in the 370 to 375 zone. Netflix, I'd love a bit more of a pullback on Netflix to start establishing some longs, whether it's income trades like a 111 or either a 111 or ratio spread, or I just start to throw in like, hey, look, it's at a decent discount. I'm going to throw in $1,000 in Netflix. We're throwing a couple $1,000 in Netflix. If we feel this gap right here, there's two big gaps I'd be watching on Netflix. One is this area, and the other one would be, we'd clearly look like we're in a bear trend, but we'd come all the way back down to this gap here. So if I had area 1 to buy, area 2 to buy, I mean, Netflix has still all the potential in the world to still be a $1,000 stock. Okay. Bistrat, if you're asking about futures and options, one good place to start is if you purchase the Pulver Alerts bundle. I know I have a full course called Practical Options that's included with that purchase. So that's a good place to start. That's 13 of my favorite option strategies. Or you just keep tuning in and you'll just keep hearing me talk. That helps too. NVIDIA, 132. I've got it collared at 140 and 130. This one, let me double check. I get a ratio spread on NVIDIA. I've got a collar trade on NVIDIA. Right now, my 100 shares, there's my 130, 140. That's my collar trade. The bearish trade, and this is out to March. And so my look on NVIDIA is this. We have a pretty nice gap to the downside today. If this, fills the gap and it gets called away greater than 140, that's totally fine. I'll make some money on the trade. I think my break even on NVIDIA, let me double check here. NVIDIA break even, 132.14. So if it gets called away, I'll make $7.86 a share, which isn't too shabby. If it goes lower, then I will be looking at using my put to lower the cost basis and then turn to flip this hopefully for, I'd probably, if we get a decent flush lower, then I'm probably going to try to take NVIDIA and flip it for like $10+ a share. Right now, $7.86, not too bad. But if we get another flush lower and I can lower my cost basis, I'll try to flip this for 10, maybe $10, $15. Okay, Tesla 392. Still going to keep an eye on Tesla. I've got some dollar cost average levels in here at 360, 250, and 285. Also have some ratio spreads. Look, right now, if you have a broker that gives you implied volatility, you might look to sell some premium. Tesla's not a bad trade. I might look at another. This is a ratio spread for February. I might look at a ratio spread for March. Let me look at one right now before I go. I've got about 5 minutes before I have to go. Tesla. If I went out to March, so March 21st. Okay, so we'll go 67 days. Could I do something in the, the sub? I mean, anything below 275 is okay. So these aren't bad. So I could do, let's say, a 280 by 275 by 270. I mean, that's not a bad trade. It is a 90% chance of profit, about a 7% chance of assignment. Would I take shares of Tesla at 270? Yep. If I did take shares, would I own it? 270 would be the assignment price, -5, minus 312 or 310. I'd own shares of Tesla at 261. 261 is quite a bit lower. Now, the 200 moving average is around 275 to 280 right now. Income wise, I mean, we do have a gap fill around this like 240 to 2. Yeah, that's not bad. We have a gap fill between like the 245 and 220 zone. So maybe if I bump this down, 277, how about I take a trade for this one's okay. So I get over $2 of income, but a 93% chance of profit, an assignment risk of about 5%, which I've got the capital to take on the assignment. That's not the problem here, but I'm just looking at income. Would I rather make the extra $100 for the trade, or would I rather, take on like the highest probability, take in a little bit less buying power reduction, and still, grab $200 by March 21st? I think I like this trade. So let me see if I can get filled. Hopefully minimum's like 210, but I'm going to try to get like 215 or better. So I like this trade. So I'm going to buy a 265 and sell it. Let me see what this looks like if I do. Okay. So break even here would be about 247. Assign it 255, -5, minus 2.16. 247 and change to be my assignment. If I do a ratio spread, let's see what this ratio spread looks like. If I delete this leg and go up 2 contracts on the 260, I get 245, but my ownership would be 260 -5 minus 2.45, 252 versus 248. I mean, obviously I'd rather own it cheaper if I'm going to own it. So let me take this back down to 1 contract, add in the 255, and that trade's okay by me. So again, 93% chance of profit looks pretty good. Tying up some buying power. Am I willing to own the shares? Yes, I'd own 100 shares. So I'm going to take this trade hopefully for 215. All right, this would be the trade that I'm going to throw in. I'll get it updated in the pulver list for Discord, and then I have to bounce in 2 minutes. Let's see if I can get filled here for let's try 220 at first. So 220 is not filling. Mid price at 217. Fill the 217. That was easy. Right. So I'll get that trade added in. I'm going to throw that into my personal tracker. Then I'll add it into the pulver alerts. So Tesla. And that is a 3/21 expiration. Buy the 265 put. Sell the 260 put. And sell the 255 put. Collect the 217 credit. 93% probability of profit. About a 5% assignment risk. And willing to own shares. And the break even on the assignment would be 255 -5 minus 2.17, 247.83. Would be if I took on any assignment, I'd own it at 247. There's enough premiums in Tesla that I could lower the cost basis. I would sit on that. I think we're going to be okay. So I like the trade. It's just an income trade at first. If it turns into or evolves into an assignment, I'll take on the shares. I've got the capital for it. All right, so I'll throw it in pulver alerts. I'll get that in Discord, and I'm going to get this in for a couple other accounts as well. So take this trade, similar order. Let's get this trade in for a couple other accounts. Filled there. And filled on this account here. Cool. All right, so that's in. All right, so that's in. I'll add that into the Pulverless Discord. All right, buddy, I gotta go. Hopefully there's another guest or wrapping it up. I'll see you tomorrow. All right, thanks everybody. See you, bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.